Now, as promised, the Motilal Oswal 20th Annual Global Investor Conference kick-starts in Mumbai from Monday. To talk about this, as we always do, as we've always done, we have some of the top people with us here. Rajat Rajgarhia is Managing Director and CEO at Institutional Equities at Motilal Oswal Financial Services. Sachin Shahane is Head of Sales, Institutional Equities at Motilal. Gentlemen, great to have both of you here in our studios. I think it's going to be manic next few days, as it always is, but also a lot of fun at the conference. 20th. So, I mean, it's a long journey that you've seen, and it's become like really a marquee event in the financial calendar, at least here in Mumbai. Very well attended as always. Rajat, tell us a little bit about what's happening this time around. How many companies? What's the size and strength looking like?
Yeah. No. Good morning. Thank you for having us here. It's sinking in that this is the 20th year of this conference. Started in 2005.
Yeah.
I remember that time we used to highlight the $1 billion club market cap. Today in the 20th year, we are talking about the $100 billion market cap, right? Yeah. We have been, I think, both fortunate and blessed that we are in this era of this country's capital market journey, where in the last 20 years of this market, we have been well associated with bringing some of the best platforms for our investors. So this conference, which has grown in size in the last 20 years, just to share some numbers, this year, and needless to say, every year is the larger than the previous year. We have about 200 plus top Indian corporates. We have about 1100 plus investors from everywhere in the globe to every corner of the country. And plus, this time we are doing a record 15,000 plus meetings for investors over a 3-day period, right? I think two important things that I can further highlight: the diversity of the participation of the companies is the best ever, right? And that's a way how the character of this market has evolved. And secondly, the same diversity we see in the investor base also. A decade back, conference used to hover more around, suppose, mutual funds and FPIs. Now you have mutual funds, FPIs, of course, they have grown in size, but then you have pension funds, insurance, family offices, HNIs, direct retail. I think this probably is at the most interesting point of the last 20-year journey that we have been hosting this conference.
Talking about the $1 billion club, we had Ruchir Sharma with us. Shireen was talking to him on Friday. He said that over the last 2-3 years, India has seen the largest number of billionaires being created. I mean, the highest number, And of course, a lot of it is to do with stocks, assets, equity assets, which have grown in value and incredibly well. What's the theme this time, and what are you really sort of bringing to the table in terms of thought leadership? Because markets have done phenomenally well. I think the regular question always is, where are we in the cycle? And I think we'll get a lot of that. So let's just start with that.
Yeah. So, one very interesting theme that we are developing, if you look at globally all the investable 30-40 countries, right? You can divide half of them into size and half of them into growth. We probably are the most unique one where you have size into growth, right? Staring at 4 to 5 trillion and then growing at an annualized rate of 10 to 12%. We are rebuilding in the next 7 years what we have rebuilt in the last 78 years as a country. So I think the theme this year is that India is a destination where you have size and growth, point number one. Point number two, if you look at around the globe, you have events which are making things volatile, right? Whether it is east of us or west of us, right? Right from an US elections to the China slowdown to the Far East woes, right? I think we are again standing out as an investment destination, right? And the third thing is that till now we have always been talking about demand, right? And kudos that we have now almost 30 to 40,000 crore domestic pool coming into markets every month. But I think important is today when we stand, we see supply also building up into this market. So this market is going to be a lot more interesting going forward, because as much the demand for equities is going to grow, you're also going to see good quality supply also building up.
And that's great, right? Because that balance is so important to ensure that we don't get into some sort of a bubble where the supply-demand mismatch goes sort of beyond expectations. So actually on that, Rajat, and maybe Sachin come in here as well, because you have so many client conversations. It's a trend that has been firmly established, that it is domestic investors, retail investors, institutional investors that are ruling this market. Foreigners have been consistent sellers throughout. What chatter do you pick up in those conversations? They all say they like India. What is the issue? Is it valuations? Is it better returns in the home market? And what would you be looking forward to in terms of all the FPI conversations that will happen in the conference this year?
Yeah, so good morning and thanks for inviting. I think the point which you well mentioned, so most of the FIIs and FPIs are thinking of valuations as one of the key concerns for Indian markets. Having said that, the interest which we are seeing from FPIs in the conference is also fairly large. And as Rajat just mentioned, it becomes bigger every year. So even FI interest in India is becoming bigger, and our conference is going to showcase that.
So they're not putting the money, but they're coming.
Yeah, exactly.
They're coming for sure.
So
we'll ensure they will put money also.
No, but you know, just focusing on this point, the FI ownership, I think, has come down to the lowest we've seen the last 12 years or so. I think one of your notes as well mentioned that 18.5% odd. Are we getting to a phase where India is too good a market for them to avoid? You know, they've been selling in, selling out is what we have seen. So your comment on that?
So I would just like to share one data point. Last quarter, China saw $15 billion of FPI outflows. That was June quarter versus India roughly $1 billion.
Yeah.
So I'm just saying that, you know, India definitely has the opportunity to get returns from the companies in India.
Yes.
So you have to see a relative.
So it's more an emerging market basket selling that we've seen, and that's why India is seeing a smaller part of that.
Absolutely. So
over the last many years, I think both of you would agree, it always used to be FPI, FI. The balance of power was always foreigners because they had the big guns and the big firepower. That has completely changed, and how, right? I mean, last 3-4 years.
You know, every evening we used to go to bed seeing the net FI flows for the day. And every morning we used to wake up seeing how the US markets closed last night. I think that phase has kind of been left behind
us.
Nowadays we see how much DI is bought every day. Right.
And what domestic companies are doing.
So I think, in fact, just to add, Surabhi, to your point, a lot of institutional clients call and ask as to what is retail and HNI and family office and PMSs are doing in the markets. So it's a very interesting time which we are in.
And to be sure, we're not gloating. Right?
We're just acknowledging a change in trend.
Fact. It is a fact. It's a change in trend, and it's completely changed. What can what can cause this 30-40 billion, 1,000 crores which is coming into the market every month, Rajat, as you said? What can anything shake it? And a period of underperformance? Because as someone said, 8 out of 10 investors in the market now have come in the last 3-4 years. They've not seen a down cycle. And I think that's, again, something which you guys, I'm assuming, would talk about and discuss. And can anything shake this faith, your sense?
Look, I think first we need to understand why this is happening, right? It's a very natural phenomena of a per capita GDP growth that you see. When you were at $1,200, you were essentially meeting your basic demands. Today you are at 2,500. The pool of money that you can afford to, spend is growing, and just a linear growth will take this 2,500 to maybe 3,500 in the next 4 to 5 years, right? So the discretionary pool is only going to grow. That is one. Second, equity. We can look at time periods, but at any point of time, you should assume that equity as an asset class post-tax can give you 12-13% return, right? The compounding impact of that comes with higher income level. So whether this 40,000 crores becomes 70 or whether it becomes 30, I think is less of relevance today. What is important is that in line with the GDP growth, if this number keeps growing, right, that's a large pool of capital over the next 5-10 years, right? And it's a you can say it's a compounding impact where the money is going into the market is growing that money, and that is pulling in more money into this, right? Only a period where you go through a very low economic growth, where your faith in the corporate earnings slows down, can slow down this, which we are not seeing at least for some time.
So very quickly, gentlemen, last question. Rajat, what are you most excited about in terms of the corporate conversations that we'll hear in the conference? Because the last year has also seen a trend in terms of a lot of new businesses have come to the market, and you mentioned that, right? New supply. Now, whether it's an Ola or it's a Nykaa or it's a Honasa, a lot of new companies are coming in, and investors are liking the whole turnaround journey as well. Zomato, we're waiting for Swiggy to come. So what is going to be the wow factor for you in terms of the corporates?
I think there are three very important questions that are being raised right now. Right. I think first, last 18 months, we saw manufacturing as a sector come back with a bang on the capital markets, right? We need to now see the next 3-year earnings progression for them to sustain where they are. Secondly, we saw consumer and discretionary actually slowing down in many categories last 18 months. And generally, investors would like to pick them at the first sign of a turnaround. Does this good monsoon and low rates in the coming future, right, help that? So that's again second question that people would want. And I think third, the most important is financials. Such a large sector in the market, not been performing well, deposit growth a challenge, right? Again, investors tend to pick the underperforming sectors at the first sign of a turnaround. At this stage of the market, while the markets have done well, you still have spaces which have underperformed. So I think people still want to make good money from a high of this market right now. That's what they are going to pick from the
whether the underperformers can start turning around, and that's the next
step. And how much leg the performers have to continue to carry.
So the large private sector banks should be top of mind then. Some of them haven't done much in the last couple of years.
Absolutely, because they still constitute a large part of the earnings and the market cap both.
Indeed.
Okay.
Got that. I think we've been told to
wrap.
We have a lot more questions.
We'll see you all at the conference.
Thank you very much, both of you, for joining us, Rajat and Sachin. And we'll see you guys again on Monday and over the next couple of days as the conference comes on. So that conference, Motilal Oswal Marquee Conference, kicks off this Monday, 19th, and of course runs for the next few days.